following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 96. Nasdaq's up 24. You got the S&P's up 5.5. Gold's down 760. You have silver up 4 cents. The bond market, you get the 10-year off 9 ticks. The 30-year is off 14. And King Dollar, she's up 357 ticks, trading out at 85.66. And folks, if you haven't test drove the Nadex platform yet, well, hopefully you are all signed up for our virtual trading contest, which is going to start Sunday night. We're going to be giving away $10,000 in cash next week. Darrell Martin, what's going on?
Hey, I'm right here.
That's a beautiful thing, man. Totally.
Okay, Mike, yeah, you can hear me, right?
I can hear you. I can hear you all the way from Texas. That's a beautiful thing, man. I like it. You know, and folks, as I get a little feedback, Al. As you are trading this next week, don't forget Darrell has an awesome analyzer that we're going to walk through right now so that you can, it's not going to tell you whether they go long or short. What it is going to do, though, is tell you the best contract that you can trade when you're looking at the Nadex platform. So if we go over, you know, of course, you know, yesterday you had a downdraft, folks. You had the volume, you had the conviction, you have all of the above. Now, this morning, news-wise, before we get into it, what's happening out here, and this is a big deal. Bill Gross is departing PIMCO. And what is intriguing about this is that he is leaving the, well, actually, it looks like he got booted out. Bottom line is that, you know, as the rats jump off the ship, you will see where this shakes down, because what you do have, it's the largest bond fund in the world. But what also happened is that the SEC started investigating them quite a while ago, and this week, I suspect that has something to do with it. You know, so this, you know, you talk about dislocations. The dislocation inside the bond market could be insane. You know, so we'll see where that.
Wow.
I know that's
massive, because I mean he's like. I mean, that's what they're all about.
He's the king. I mean,
yeah,
they labeled him the king. He is the king. And, you know, so I was talking about this 2 days ago. And when the SEC came out, so this is what the allegation is. The allegation thus far is that inside one of the funds is that they had bought assets at a discount. And what ends up happening is that their fund itself, folks, compared to the couple other funds that would be their competition, is up dramatically. Okay, so over the course of the last 15 months, what has happened is that the redemptions have gone down overall in PIMCO, but one fund happens to be up quite a bit. And what I was speculating is that they own a lot of funds, folks. So what could have happened is that they could have bought the debt off another fund at a discount, put it in the fund, have that fund be, you know, a big percentage gainer, which it is, and that percentage gainer, of course, brings in billions and billions of dollars. So that's how they make it up. So, you know, when all of this happens simultaneously, it looks to me like they got problems, period. That's the bottom line. And so he's going to Janus, and PIMCO, their parent company, is basically down about 3 or 4%, and Janus is up like 15. So it's pretty wild.
Wow.
Yeah, I know. Yeah. There's going to be then these bond ETFs, you know, what they're also what the SEC is wrapping their hands around is there liquidity inside a bond ETF. Now, there's a liquidity there. The question really should be is that how bad will it be when the selling starts? And I suspect it's going to be really bad, because what you do have with these ETF structures, it was just like the first ETF, folks, you know, out there was the SPY. Then the Qs came into existence and the IWMs. In 1999, when the market started going south, no one could quite understand why the Nasdaq was going south in such a dramatic fashion, like very quickly. Within 6 weeks, I mean, it was toast. That had to do with the first time that the QQQs are out there, because if the futures got sold or the QQQs get sold, guess what? Everything inside it had to get sold. Well, the same is going to be applicable inside the bond market. That's, you know, so the reality is that that's how it's shaken out. So, wow. I know. Oh, man, I'm telling you, it's you know, the doors are never big enough for people to get out, period. No matter what vehicle it is, too, by the way, folks. If you hear that, you know, many times I hear in this business that the managing managers say, "Oh, don't worry, you're diversified." It's like, oh, really? There's no such thing, folks, as diversified. Because the correlations are way too intense right now, in a big way, you know. So,
and that is one of the good reasons to, you know, just know about options. And I'm not saying that it solves the problem.
No, but
it amazingly gives you a way to hedge off, and I mean, just another liquidity avenue. And I know one guy who was just he had a position. And it was doing well, but he could not get out of it. He was in a future contract. It was a less liquid future. Could not get out to save his life. And he's like, they won't let me out.
Right.
And I was like,
and that's
go
exactly
in.
What it is. They won't let you out. That's a great quote, man, because that's how it is, folks. When you're in and you can't get out, it's like, oh, my God. Right.
Yeah. And so I'm like, well, they have puts. Just buy a put and exercise it.
Right. Right.
And he bought it. Boom. And he was done. He was out.
How
you know, it cost him some premium.
Oh, yeah.
But he wanted out now.
No,
you know, and that they didn't have a choice when he exercised that put.
No,
because he had the right to sell at that price, and they had the obligation to sell it to him. So that is a beautiful thing about understanding those option markets when those weird things come up, and be able to actually take advantage of that.
There's no doubt. And as we look at this, okay, so in the gold market, folks, okay, if you're up on the Nadex platform, when you're looking at this gold market right here, what we have is this. The gold contract, okay, yesterday, so if we take a look at yesterday, what you're looking at is that you rejected lower price yesterday, you had lighter volume. Well, actually, it has lighter volume as to what it's going into. Yesterday, you had some real good juice. You had 180,000 contracts, 86,000 contracts. But when you take a look, I want to get this thing off right now, actually, because what's happening is that you're at 1213.90, and there's a 1212 to 1227 level that you could get, and your risk, when you'd be doing something like this, your risk is only $27 for 123. Now, I certainly don't expect that would go to 1227 in a couple hours, but guess what? You actually do have a bar up there at 1223. So in that aspect, that's the type of trades that you're going to be looking for, well, even with real cash and or with the contest next week. You know, so that is a nice setup. And the reason being, if you're watching Tiger TV, what you're going to see is this. On this 10-minute bar, what has happened is that you're coming back into the sign of strength from yesterday. Your first sign of strength was from 1209 to 1216. Your second sign of strength was up there from 1219 to 1224. And I suspect what we just did here is that we just came in with 3,500 contracts, and that's going into 8,100 contracts, and this 10-minute bar is going to reject it. You know, so you know, that's the type of trades, folks, that you're looking for, and we'll see where this one shakes out. But you know, you get a Friday, and what does happen with Fridays in the gold market, they can absolutely smoke it. There's no doubt about that. But that's why you're trading the Nadex platform, because you can see in this particular case your risk is only $27 to make 123, or $270 to make 1310. You know, so needless to say, this is going to get interesting next week, Darrell.
Yeah, well, I mean, the bond shakeup can shake. I mean, because it's like usually people are like a lot of times they're looking obviously at the the treasuries and the bonds, to make decisions on the equity markets and everything else. And you know, and so all of a sudden, if you have this odd interruption that really isn't government news, interest rate, whatever, but a massive position holder, and liquidation starts happening.
No, there's no doubt.
It's just one of those. I mean, it's almost like a weird black swan event. I don't even know what you would do with it. No, what do you do with it?
This, you pay attention to it, but I absolutely agree. No, I'm not kidding. This is absolutely a type of black swan type of an event that comes out of nowhere, that the last thing I think most people would expect, certainly, the way that Bill Gross has been over the course of years, I mean, this is the king getting dethroned, folks, and not in a good way. I mean, the reporting goes like this, okay? The reporting comes down to when Mohammed Al-Arian left PIMCO, he basically floated a story out and then he denied it that Bill Gross is out of his mind, basically, okay? They're screaming, yelling, and all this stuff, all right? Well, David Farber this morning on CNBC basically said that there was many people inside PIMCO saying they were going to leave because Gross was out of control. That's what's out here right now. Now, that may or may not be the case. I think the SEC deal is a bigger deal because the SEC deal has to do with basically, was that fraudulent? And if in fact my speculation is that there's not an allegation out there yet. What they are investigating, however, which is public knowledge, is that they're investigating the aspect, what I just said, is that how is this fund up so much money? And did they buy a discount? And that's where I got that from, folks. It was in the allegation that they feel that they bought discounted assets inside the fund. And if that was the case, and you tell people, that's fine. But the discounted assets inside that fund is like, okay, did they come off another fund so the other fund didn't get their full value? And that's where there's going to be trouble in paradise. You know what I mean? So,
right. No, 100%. I mean, that's... If you're robbing from one to pay the other, then it's like, well, where's the preferential treatment? Why is it there? What are you doing? I mean, yeah.
And check this out, folks, okay? If you don't really understand this, I'm sure many people don't, that phenomenon used to be and still is a huge problem. And what it is this, is that inside large broker-dealers, money managers, some money managers, they have portfolio accounts. And the way a portfolio account goes is this, is that they can put on one trade. Let's say, you're going to manage any of the big banks. You put on one trade, you say, okay, I want to buy 100,000 shares of Apple, okay? So you buy 100,000 shares of Apple. Now, they're buying it for all their clients. Well, what ends up happening is that now you got to allocate that 100,000 shares. Well, picture this. You buy the 100,000 shares. Picture that what ends up happening is that Apple goes up $2, right? Well, guess what? What can happen very easily is that allocation can go to what accounts? Well, guess what? They're picking accounts, So there's still a lot of phony baloney business inside portfolio management that is pretty incredible. Years ago, it was more pervasive. Okay, they've
really,
yeah. Oh yeah, man. Forget it. It was 2 days. It was 2 days before your bottom line. You could change things. It was sick. Darrell Martin, Tom O'Brien, you stay right there, folks. We're coming right back. That gold's going to go for me, man. We're only down 7 right now. We're at 14.90. We're going to be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. We take that and replay it, so we are on 24 hours a day. You can get all that programming right on your cell phone, TFNN.mobi. Darrell, let's talk about the trading contest, your analyzer, and how folks should use it next week.
Okay. Well, the trading contest is going to kick off at 6 p.m., right? And you have a workshop tonight, right?
No, I did it last night.
Oh, no, you had a workshop last night, yeah. So, anyway, so you had the workshop last night, and we're going to be talking a lot about, obviously, different ways to trade Nadex and setups next week.
And what does happen, folks,
trading hour.
And what does happen, and Darrell does an amazing job every day, folks, okay? But you can go right to the Nadex site, and there's plenty of videos on that site, too, over the weekend. And do it, folks, okay?
Yeah, check their education tab out. They have a ton of stuff right there.
Yeah.
So, and also, we have the analyzer. You're talking about that.
Yes.
And when you log into the analyzer, there's a whole tutorial section as well. Okay?
Yes.
So it's going to give you step-by-step, talk about application, talk about strategies, talk about the spreads, talk about the binaries, and it has archives of my show, too, so you can catch up in case you were at work or whatever. We just make it one quick, easy link if you're inside the scanner. And even, today's show will be broadcast right in here with the Bull Bear Binary Hour.
Yep.
And so you go in. First thing you're going to do is you're going to want to click Demo, right? Because you're going to be trading on Demo for Nadex. Next thing is your quantity size is limited to 10.
Right.
Okay? Per order. Now, you can do multiple orders, but you got to be layering in at 10 and out at 10.
Right.
Okay?
Right.
So you can default your quantity at 10. That'll help you not make the mistake of maybe mistyping it when you open the ticket.
Which is huge, folks, because if you go over that, it's going to be, you're going to be disqualified, basically. So.
Well, what they do is if you go over it, if you lose, they count it, and if you win, they don't.
Oh, great.
So it's like a double hit. So it's like, do not break the rules. So, I mean, instead of disqualifying people, making them mad, they just count it against them, or they don't get it credit. So, and then the other thing is inside your demo platform, this is what the demo platform looks like. You can do the same thing. Go to the My Account section, okay? When you log in, go to Settings, and you'll have to do this on your new comp. So even if you did this right now, you need to do this again whenever you get your new login. Okay, because these settings are tied to that login. That's a mistake we want people to know. Like, make sure you use the virtual trading contest login, not your regular demo login if you have another one.
Right.
And then hop on over, go to Preferences, and then under that you can also default your contract size. So that way if you open a ticket from the platform, you don't mistype it or whatever, and it'll automatically just default it to 10 for you. And then you just go to the bottom, you hit Set Preferences. Okay? So really important tips. Simple tips, but that's such an easy mistake to make, to just fat finger 100 or something like that, and boom. So it's just that simple. Then you don't even have to worry about it. Like, you never have to edit your quantity unless you're going to do less, but you don't have to edit it to worry about making it more.
Right.
And then, anyways, once you get in, then it's a matter of start looking up your trades. Well, the first things you can do is Forex on Sunday night starts off at 6 o'clock in the evening. Okay?
Yes.
So you can start trading that
early. And the Forex market, folks, has been on fire. Okay. So,
oh my gosh, it's been fantastic. Aussie's just been getting cremated. I've been loving it. Going there and just bringing that on down. But I think this bond market, who knows? I mean, that's all sorts of impacts that's going to have on the FX market just worldwide. So just more volatility coming, baby. That's all I know. But this September, October, that's when volatility really kicks into gear. So it's staying true to form.
Boy, and that Aussie dollar, man, I haven't looked at that. Is amazing.
Dude, it's been breaking lows on a constant basis. I've just been shorting the crap out of it.
Look at that, folks. This has just gone from 110 to 87. Yeah. Wow. Okay, guys. It's sort of like in the tech, during the bubble, the internet bubble, you just buy and you make money. Yeah. Right now, you just sell the Aussie and you make money lately, man. Yep. It's just been nuts. Like every rally, I'm like, sell. Every rally, sell. But anyway, so you can hop in here. You can start off on those FX markets on Sunday. Definitely, listen and tune into my show because I talk about the news. That's obviously a big impact on FX. I let you know what trades, what expectations, which ones just to be aware of. Sure.
And you can go and you can trade the spreads or you can trade the binaries. If you're new, I suggest you pick something and stick with it. Right?
Yes.
If you're brand new, binaries are we talked about this before. Binaries are really easy to understand, but they're a lot harder to trade.
Right.
Spreads are a little harder to understand, but they're a lot easier to trade.
Yes.
And the reason for that, we'll talk about that when we get back.
You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 70, Nasdaq up 19, S&Ps are up 3.5, gold's down 7, silver's up 8 cents. You get the bonds, 10-year off 8 ticks, 30-year off 11 ticks. Darrell and I are going to be right back, folks.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell Mott and Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, every trading day, 1 to 2 Eastern Standard Time, you can listen to Darrell's show, and that's going to be absolutely crucial next week, folks. If you want a shot at winning one of these prizes, and of the first prize is $3,000, second prize is $1,500, third is $750. We have 2 at $500, and then 5 at $250, and then each trading day, folks, Monday through Friday, if you just trade, is going to be a random pick, and out of that random pick, there's going to be 5 separate $100 winners, and you can win more than once, too, by the way, folks, on that random pick. So, if you listen to Darrell, we're talking about his analyzer right now, and we're talking about what he sets up, because the bottom line is that inside the commodity market, inside the indices, and inside the currencies, there's plenty to trade out here, and the spreads have been getting tighter and tighter and tighter, which is just a beautiful thing, man. So.
Oh yeah, well, I mean the spreads on gold.
Yeah,
have been fantastic.
They are, man. It's if you're trading the gold market out here, folks, in the futures, go over and check it out because it's about as intense as you can get. And specifically, so I get the contract up right now. If you take a look at this contract, the contract's been getting killed. Okay. Bottom line is that if you're trading the contract, you're going to put $5,000 up. Okay. The bottom line is that guess what? Then you get $100 a point. Well, guess what? On the Nadex product, you're basically putting up, oh my God, you're putting up nothing. That's the bottom line. You know, because what you have inside that, so even if we look at the same thing, if I pull this back up here again, where is this? Okay. So right now, the same one that we were looking at earlier, so you get the 12, 12 to 12.27. So if you think it's going up or down, either 12.14, right. Guess what? You can do 10 contracts, and that's costing you $240 risk for $1,200 gain. That's like insane, okay? Because the reality, folks, is that whether you're a bull or a bear, guess what? The lows that are out here in gold are about 11.85, which on a Friday can hit in a heartbeat. So that's the downside, which, you know, is big money, is $3,000. And then the upside is that, okay, you can go to 12.25, so that's $1,000. Well, guess what? You're only risking $240, period. Defined risk, that's it. What you're dealing with is that you're dealing with the time aspect of it. You know what I mean? So
right.
But with gold, it's great, man. I love dealing with that time aspect of it. You know.
Well, I mean, basically, I mean, and especially if you're focusing on like dailies and stuff like that too.
Yes,
you know,
exactly.
Help.
Exactly.
So, I mean, then you're talking about close of pit, and most day traders. Now, I'm not saying they may not reopen positions afterwards. But most day traders, I mean, are obviously closing before the pit session because they don't want that big, massive margin increase.
Especially on Friday. You get exactly, man. Exactly. You know, Friday, folks, is good, but it's dangerous in the gold market. Let's go all the way over to Thailand. Let's go to Mike in Thailand. Hey, Mike, what's going on?
Hey, Tom. How are you?
I'm doing great. You having a good day out there?
No.
Why not?
I'm tired. They beat me up last night. You know, I got stopped out of TZA, and I missed, you know, I missed the last end of that move. I'm kind of bent out of shape about it, you know.
I don't get it, but go ahead.
All right. Well, I missed out on an extension of that TZA. You know, I got out at like 15, about 15.8, and the thing ran all the way up a lot extra. I was expecting a bounce yesterday, and you know, so that's my story about how I'm doing. So
okay,
go ahead. So anyway, I got a few questions here for you, Tom, and I doubt you're going to be able to get to them, but this dollar thing has me perplexed. I thought that we were going to get a top. I was thinking just like you, we're going to back off a while. And I'm wondering, do you think this rally in the dollar is and has been an anticipation of something really big blowing up at PIMCO?
No. It's just the dollar's strong, man. We got a strong country, man. The dollar already went to hell in a handbag. You know, I mean, it's strong. There's no reason that it shouldn't be strong. You're sitting in Thailand, right? We lost him. The bottom line, folks, is that the dollar went from 121 down to 70. Bottom line, you're going all the way back up. And, you know, as one of Tiger said, it's relative to the rest of the world. And that's all that really matters, folks. Just you got to remember something. Money in general is all fake. Okay? So all that matters is what is the perception of it and what can you buy with it. And where are you? And what's the quality of life? Okay? And the quality of life around the rest of the world right now is a piece of junk. That's what it really comes down to. And, of course, you know, the amount of fear that continues to get sold is huge. And I'd tell you, don't believe it. That's the bottom line. So, and probably, you know, so.
I mean, well, fear is, I mean, it's the easiest thing to sell.
Well, we know that.
You know, people come out there, I mean, you go to the doctor when you're sick, you don't want to go just to get a checkup. You know?
Right.
And fear makes people move, and so people use that as sales. But, I mean, it's...
And
no matter how bad the dollar is, the world's worse. I mean, that's really what's going on.
And,
you know?
And in that context, okay, so my man Danny in the Den saying the prettiest girl in prison, right? But folks, I don't buy that. And this is why, okay? This is why. That the aspect that that the dollar is going down, the aspect that this is bad, the aspect, all of those aspects, there's no facts behind them, okay? That's the reality here, okay? The reality is that do we have big bills? Yeah. But guess what? We have our economy that's huge. Do we have assets? We have so many assets, it's unbelievable. And all you have to do in this particular case is just look around and see how the rest of the world is living. We're so lucky that we, got born here. I don't even know how it works, okay? But the bottom line is that, so the rest of that is crap. The rest of that really has to do with the amount of propaganda that politicians play and people play on a continual basis, So, hey, we'll see where it goes, man. But, the turn is already there, and the turn's been there for a long time, too, by the way, So it's back to King Dollar, and that King Dollar, Mike's in Thailand, right? Thailand's a beautiful place, folks, but guess what? What's also happening in Thailand is that, basically people want more, and they want freedom, and they want, want to be able to basically live like we're living. They all want to live like we're living. That's the reality. So that should say quite a bit to all of us, So let's talk. So 6 o'clock at night we start with the currency forexes. The reality for most of us, right, Darrell, would be that indices start trading Monday morning, and that's where people should be gearing up for, right?
Exactly. So gearing up for Sunday, Monday, right?
Yeah.
Monday, 3 a.m. And we're all talking, by the way, Eastern time. Very important thing for everybody out there listening. Whenever time we're quoting these times, we're quoting Eastern time. Nadex quotes in Eastern time, and I don't live in the Eastern time zone. Right, I'm right here in the deep south here in Texas.
Right.
But I have my computer set at Eastern time just so I don't make mistakes.
Yeah.
You look at 3 p.m. expiration, you're like, oh, okay, and boom, all of a sudden it's an hour. I'm an hour off. So, but Eastern time. So 3 a.m. Eastern time is when pretty much all the commodities and indices are going to kick in.
Yes.
Which means, like you said, most people 8 a.m. or 7, whatever time they start trading. And so they can go in. That's where they can start trading. Any of the major indices or the commodities. There's been some great moves in oil lately.
Oh yeah,
and that's fantastic moves.
And that's a beauty to trade on the Nadex platform. Also, I meant folks. So watch this correlation too, and it's the same type of deal. Oil, which is amazing. Okay, it's our lifeblood. But the thing that's crazy is that oil will trade in $1 or $2 increments, which is like insanity. It's monster bread, man. So, and the larger,
grab it 50 cents or $1.
Yeah,
nothing. I mean, it's easy.
Yeah,
and in the sense of the move, it's not like I'm sitting there waiting for a day for that thing to move. So which is important for those out there that have part-time trading schedules.
Absolutely,
right?
Yes.
So, and oil has a decent predictability to it. I know nothing's just perfect, but
right.
Like natural gas is on crack.
Yeah, exactly.
And but oil actually, it has some decent moves, and when it goes fast, and so you don't have to wait all day to get that 50-cent pop, which can be more than enough for a nice solid trade.
Yeah, and what you have, looking at oil, to me, it's on a long-term trend down. So, if in fact that's what's going on. If you can get the longer trends right, folks, the shorter trends make you a genius. That's what it really comes down to. You know what I mean?
Right. Yeah. Well, I mean, and I think that's an important thing. I talk about Aussie dollar, right?
Yes.
So you're like, okay, Aussie dollar, obviously in a downtrend. I mean, just open a chart, boom, it's there. I mean, you had it up earlier there.
Yes.
So now that's the shorter chart. Now it's like now that you know the longer term, the medium term. Now you hop in, and that's where the Nadex is going to come in.
Yes.
So it is important. I think people miss out on this when they day trade. So a lot of times they get a little lazy. We all get that point. Sometimes they forget to back up to like weeklies and daily charts.
Right. Right.
And to see that trend and then go, you know what? I mean, obviously I want to go with the trend. Even in intraday doesn't mean you can't fade it, and it doesn't mean I don't fade it sometimes. But selling on those rallies, buying on those dips whenever you're in, but you don't just sell the rally by the dip. You do it with the trend.
You do,
You do. And so when you're selling the rally in a downtrend. You're not selling the rally in an uptrend.
Right.
And people sometimes on an intraday basis forget that. And I think that's an important aspect to think about. What is the overall trend? How can I go with that trend, but wait for it to pop up a little bit? That's a lot of times what you're doing whenever you do like your Tiger Gartleys, right?
Yeah,
no, and you got your 618, you got your magnets,
it's crucial, man. Yeah.
So you're looking at the overall trend, then you're looking at your Fibonacci levels, you're finding your 618, you're going in, you're looking for magnet pricing, but you go, okay, this is with the trend, this is at my magnets, this is all that stuff. And you put the whole plan together, you trade your plan, plan your trade your plan. You put it together, and you trade with that trend, but on the dips when all the other stuff lines up.
Yes. And, when you're looking at this Aussie dollar, which is amazing, this thing, we're at 8.774. You break 8.666, folks, and you're going to be down to like 8.067 in a heartbeat, which is just insane, because you're already inside of where they start cracking in 2008, which is just pretty amazing. Let's go back to Mike in Thailand. Hey, Mike, what's happening, brother?
Hey, Tom, for thank
I got you
with my bad thing. Can you hear me now?
It's like you're in a tunnel, but we'll get by it, man.
I think he's in a hookah room.
You there? Now we lost him. Okay, sorry, folks. So market-wise out here, folks, it's going to get interesting because what you have, even if we take a look at this S&P. So yesterday, the S&P couldn't get out of its way. The thing that you want to wrap your head around a little here is this. The benchmark, and we talk about a long term, the benchmark for this ESZ4. Okay, so the benchmark in the S&Ps, and I'm talking about February 5th, is down at 1760 or something, folks. And right now we're at 1962. So yeah, we're off the highs a bit, but this to me is just starting. And where I'm going with this, if you want to see, just ExxonMobil is basically leading the way. And, ExxonMobil hasn't hit that February 5th level yet, but guess what? You're getting real close, man. ExxonMobil right here, if I put this, there she is right here. Your February 5th level, the high of the low on February 5th, the week is 92.31. We've hit 93.80. Now, what I've found over the course of years is that you're going to have one sector get down to those levels before other sectors. There's already some sectors that are already taking that out. But ExxonMobil is absolutely important in the context that, okay, if ExxonMobil's going down there, guess what? The roll is on, and your probability gets higher that the indices are also going to get down there. And when we're talking about, let me put this up. So if I do, there it is. Okay. So if we take a look at that February level, even the high of the low is 1798, which is 173 points down. The low is 1737. So it's like, man, oh man, that's pretty intense. There's no doubt about that, man, because that would be a shocker, right, Darrell?
Oh, completely.
Yeah.
So, all right. So, what do we got left on the day? Have we burned our steam out in the market quite a bit, or you think we got some decent moves left? Here,
no, I think it's going to be sideways. See, what you had yesterday is that you had a huge amount of energy. You had the expansion of volume. This is right now you're building up a little cause. Do you know what I mean? For lower price. So I don't like if we go with the SPY and we look at the SPY. What you have with the SPY, just a sideways move, no juice. I can make the argument here that the SPY, you 33 million shares. Yesterday, you come down with 150 million. This is setting up another ABC structure on the way down to go after this 190.55. You stay right there, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. We're going to be coming right back. The Dow right now is up 68, Nasdaq up 13, S&P's up $1.50. Gold's down 710. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Mott and Tom O'Brien. Appreciate you growling a problem with us out here. Right now, you get the Dow up 61. NASDAQ is up 12. S&P's a flat. And we have gold down 620. We got a question in the den.
It's moving on up, by the way.
Yeah, we got a question in the den. That's, where do you see gold? I see it higher, folks. I like what it's done, and I like how it's been testing. What gets interesting about gold is that this is the last day. Let me pull this up for you, because for all you gold bugs out here, the people that want to be in this business, this is important to understand. The agreements that all these central banks have and had for quite a while, they are over today, meaning the amount of gold that they can sell is that those agreements have expired. Now, inside those agreements, and by the way, this used to be a huge problem when gold did go from the $800 value down to $252. But what has happened?
Tell us about. I don't even know about that. Tell me
okay, so here it is. Okay, European central banks sold 6.8 metric tons of gold by September 1st in the final 12 months of a 5-year accord that ends today, unloading just 1.7% of the metal allowed in their agreement to limit sales. So what had happened is that because gold went down so dramatically, right, all these big central banks had made an agreement about how much they could sell. The ironic part about it is that the Bank of England sold almost, not all the gold, but they sold the majority of it, and that was Gordon Brown, folks, who's still around, which is a mind blower. He sold it at $252, which is just unbelievable. But anyway, the agreement itself has expired, and so that means that they can sell whatever they want to sell. The important thing that I think you can get out of this here is that the fact of the matter is that they could have been selling gold as much as they want, and inside the agreement, they only sold 1.7% of the metal that was allowed inside the agreement. You know, the total in the period compares to 5.1 tons in the whole of the previous year and 400 tons allowed annually since 2009, according to the World Gold Council. Our nation's made a fourth gold agreement in May without a limit on sales. The European Central Bank and 20 others said they didn't have any plans to dispose of any significant amounts of the metal. You know, what has happened, folks, is that inside the gold market, the central banks, they have never, well, I can't say never, but each and every time it seems like they're always buying at highs and selling at lows, which is just a total mind blower. I guess it's because it's someone else's money. But if we look at this gold contract, okay, so I put the continuous one up, and this goes to Thailand. Our own gold. We don't buy gold, folks. We own, I think, just about the most gold in the world, and they don't trade it. It's always kind of the same. But what has happened is on the run up, you know, 2008, 9, 10, 11, there was central banks all over the place buying gold at 14, 15, 1600, where they weren't buying it at 5 or 600. You know, so it's kind of wild, you know, how that whole thing shakes out. It is important, though. What does happen if the central banks go in and basically blow out a huge amount of gold, it makes a difference. You know, in this particular case, I suspect most central banks. Well, we'll see. They should know that gold out of the ground is about $11.79, $11.80, and it gets more expensive every day. You know, so it's okay. We're at $12.15. You know, if you're going to take a shot and you want to own gold, this is the place to own it. That's really comes down to.
Exactly.
You stay right there, and you stay right there, folks. You get Basil Chapman coming up next. Nico and Paige are going to keep you healthy and happy. Darrell, it's crucially listening to Darrell, folks. You want to make some money. Bottom line, you listen to him. Darrell, thank you so much, man. You have a great one, safe one. Look forward to the show in a few hours.
Awesome, thank you. See you soon.
Okay, man. Coming right back. Right, stay right there, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.